And now to talk more about the implications, Vandana Hari, founder of Vanda Insights, delving into the events in the Middle East and what they might mean for the oil markets. Vandana, good to have you on the show. Now, Brent briefly touched $82 before retreating. Does that pullback suggest that markets are betting on short-lived escalation?
Good afternoon, Roland. So I would say more than markets betting one way or another, I think the markets are flying blind. Market participants are doing their best to try and extract some signal from all this noise and the very, very chaotic situation that is unfolding, has been unfolding in the Middle East for the weekend. But as of now, the reason you haven't seen a much bigger jump in crude and a fair degree of volatility points to me two things. One is, as I mentioned, great deal of uncertainty, but also the market keeping a very close eye on exactly the status of shipping in the Strait of Hormuz. As you were mentioning earlier, officially, the strait is not closed. What has happened, however, is that a lot of tanker traffic going in or that was due to come out has come to a standstill. That is more on account of the companies that are operating the ships deciding to not take chances, basically a security precaution, and to some extent, insurers essentially canceling the cover that was initially in place and waiting to raise those rates. So there is a security aspect and an aspect of what it will cost for ships to continue going through there. That's the main factor right now in the market that is guiding volatility in oil prices.
And given the closure of these straits, how significant is that to disruption in terms of the physical market?
So if traffic through the straits resumes to normal within, let's say, the next 2 or 3 days, and of course, a lot of things will need to fall into place on a political and geopolitical level for that to happen. But should that happen, we could see prices go back, start moderating again. We could see potentially that would save the world from a supply shock. But should this disruption or a blockade happen over, let's say, several days, let alone several weeks, we are seeing an absolutely catastrophic situation, obviously, for not just oil prices, but commodity prices in general and the global economy in general.
And that pretty much aligns with Mr. Trump saying that he expects this to last 3 to 4 weeks. Is the markets also pricing that into consideration?
So at this point, the markets are getting and digesting a lot of mixed signals. So yes, Trump over Sunday did say that the U.S. was prepared to continue fighting as long as it needed to meet its objectives. Of course, he hasn't spelled out clearly those objectives. So basically the world and the oil markets have been left guessing on this. But equally, we also saw some comments from him to a publication called The Atlantic in the US, where he said that Iran had sent some signals that it wanted to return to the negotiating table, and that Trump himself was open to that. But again, today we have heard from the National Security Council chief in Iran, Ali Larijani, denying that Iran had made any overtures to the U.S. to come back to talks. So I think over the next few hours and potentially days, the market will keep a very, very close eye on how this is playing out on a geopolitical level. Is there any realistic, tangible movement by the sides involved towards a ceasefire and returning to nuclear negotiations? As well as keeping an eye on the logistics, on the ground realities. Are Gulf oil flows continuing? Are they disrupted? Are they flowing at a reduced rate, and so on? And those two factors will mainly determine where we see oil prices going from here.
And meantime, OPEC Plus has raised output by some 206,000 barrels a day. Does that materially offset the Gulf risk, or is it marginal in this context?
No, it does not offset the risk at all. In fact, that the flows of those increased barrels are themselves at risk if this situation does not resolve, and if passage through the Strait of Hormuz remains at risk. Look, the OPEC plus G8 decision to resume unwinding the cuts. They have about 1.24 million barrels per day of cuts remaining to be returned to the market. That was widely expected. It was expected to be returned at a slightly smaller rate, about 137,000 barrels per day. They opted for about 206. But really, it's absolutely the situation that we are now confronting now with regard to a risk and a real threat to all Middle Eastern oil flows, 20 to 21 million barrels per day that flows through the Strait of Hormuz. The OPEC decision is absolutely at the margins.
Vandana, thank you very much for those insights. That was Vandana Hari, founder of Vanda Insights.